This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
This is how we generate setups. This is why we don't force setups. This is why so many people in this world are probably losing during the August and December times. It's because they're impatient and they're not seeing the setups that they want, so they force trades and they lose and blow their account. I have not traded a lot lately, and it's a good thing because there hasn't been any setups. But this is just the mindset we have to get into. We have to get into the mindset of taking a trade when our rules are met and sitting on our hands when they're not met. It's as simple as that, but it's very difficult for everyone because they're so caught up in FOMO and trying to make as much money as possible, trying to make $1 million overnight and become Andrew Tate. You're not Andrew Tate. You're not that guy. What's going on, fellow traders? Welcome back to another pre-market analysis video. Hope you guys are having a great weekend so far and are preparing well for this upcoming trading week. Finally, we are seeing a lot of movement, more volatility coming in, and a lot more setups that are presenting themselves. So now we can start to attack the market how we like. I have quite a few pairs to go over. I have tons of setups for you guys to take advantage of. Here at Aerial FX is where we make smart money concepts simple. So guys, if you are interested in learning how we trade on a day-to-day basis from A to Z, step by step, feel free to head over to my website, aerialfxtrading.com. Book a free call with me. It's absolutely free. There is no commitment. You'll get to see how the program works, if it's the right fit for you, and then we can go from there. If it's not, we wish you the best of luck, and we will provide you with our free trading plan on the house. If it is, we'd love to get you a part of the program and get you rolling to profitability.
Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
All right, guys, so I'm going to first start off by talking about AJ. I'm just going to go through the list here all the way down. I'm going to try not to spend too much time per pair. So guys, do allot the entire duration of this video to really good focus here, because it's going to be very important that you guys are taking notes, writing all this stuff down, marking this stuff up on your charts, and following along to prepare yourself the best way for the upcoming trading week. So with AUDJPY, what we're going to be doing here is looking for continuations to the downside, right? We are making counter trend moves, lower lows, lower highs. We are looking for another lower low for two reasons. For one, we have equal lows here, right? We have equal lows, sell side liquidity. We also have equal lows here, and we have an unmitigated level of demand. When we came into our original level of demand to the left after sweeping liquidity here and here as well, we came into that level, accumulated lower time frame, took a trade. It was a phenomenal trade. And then we made a move to the upside, breaking counter trend structure. This became that last selling volume that failed to generate the lower low, and that's where we made the higher high. We built more intra-structural liquidity. We swept that liquidity to the downside, filled the imbalance, placed another trade, nice 1 to 7, and now we're continuing to trade north. So making higher highs, higher lows, this is really just internal liquidity again. And this is the last selling volume and imbalance, as you can see here. So that's another area around 9342 in which I want to see price attack next. We created equal highs, equal lows, and we're just following the counter trend structure. So very good setup. And we sent this to our Funded Traders Club as well, I believe. We've sent a lot out for the past week. So if I didn't, then I do apologize. But I know I sent this out to the VIP community. I'm going to scale into the 15-minute, and that's exactly where and why we took the trade. Because when we created that lower low and that lower high and that subsequent lower low, where is the last buying volume that failed to generate the higher high? Well, this was all structural liquidity in here, and this is really where we failed to generate the higher high, and that's where we started to downtrend. So that would be that supply level in which was flipped from demand. So that's exactly why we were interested in taking that trade, and that's exactly why price was building up liquidity prior to that level. So looking for continuation south, I am in a little bit of profit. Market is closed about 5 minutes after market closure, which is okay. That's fine. We might open, we may take the previous high on Friday, which was today, and then continue south. That's why I have my stop above the previous high. At the end of the day, we might lose, we might win. You have to trade for the long term. That's where you're going to see your profitability. You're not going to win every day. AJ. Next, CADJ. Very opposite in a way, but sort of similar. So on the higher time frame, we have to understand that we are overall bullish. Same with AUDJPY, we are extremely bullish in the higher time frame. AJ was more of just a counter trend short opportunity. If we go and scale out to the daily time frame, we will see that we are creating a lot of buy side liquidity. 1, 2, 3. So that's the only reason why I have trend lines, guys, is to show where retail's liquidity is likely to be placed. So probably a lot of stop losses, above this trend line here. That's probably where we're going to attack next. We are in an uptrend overall. The daily 50 EMA is capping price as dynamic support, so continuations north are expected. Now, we can see here that these equal lows were taken out by this move, this huge sell to buy that is prevalent on all the yen pairs. We had that huge move on July 27th because of news. Obviously, news is not random, it is planned, so that was supposed to happen. And why? Because we wanted to take liquidity. That's why. So we did sweep it by a couple of pips. And then on the lower time frame, we did create that supply to demand flip. So last buying volume, sell off, reacted from that level, pulled back, failed to generate the lower low within this counter trend downtrend here. And that's where we created the uptrend. So that would be your demand level. We have not come into that level. We almost did, but we didn't. And instead, over the course of the past pretty much month and a half, we've just been creating this channel. So 1, 2, 3 touches, 1, 2, 3 touches. We're just still trading within the channel. Now, what we could do is go and attack the previous buy side liquidity, which I just talked about in the higher time frame from that daily trend line, or we can come short, take out sell side liquidity and come into that interested level. I am looking for buys from this level because we are in an uptrend. Am I going to be selling above this trend line? No, there's no area for me to be selling. There's no exact supply zone or sponsored candle. But anyways, continuing with the lower time frame trend, we can still look to do. So we're creating higher highs and higher lows. As we can see here, sell side liquidity, run, continuation. Sell side liquidity, run, continuation. Sell side liquidity, run, continuation. So we are definitely looking to continue to play off of structure. If we get a break of this level, because your first entry could go here with stop loss at the second entry, stop loss below the low. If we come lower than that, I wouldn't like to trade until we reach this demand zone there, right? Any sort of buy opportunity, if we actually get stopped out of this, if you end up taking the trade, is pretty much invalid until we come down to here, right? Unless we just look for another setup that could form later. But anyways, going down to the 15-minute time frame, we'll see two areas of demand that are unmitigated. We have the counter trend, low, high, sell to buy, reprice, and then we repriced here, creating that huge imbalance. So we could come and fill the imbalance, come having an overall pullback. We could come deeper into that repricing event before continuation. So I am looking for those two areas of demand for longs. Very similar to that is CADCHF. Now, CADCHF is definitely higher time frame bearish. However, I am seeing some lower time frame accumulation and potentially an overall pullback on the daily time frame. We can see lower low, lower high, lower low was formed. We cleared that previous low here. So maybe an overall pullback of some kind. Let me just get my marker. Overall pullback before continuations. This could be a nice level of supply right in here. So that's where we scale into the lower time frame. So now we know that overall the higher time frame is bearish. Lower time frame is likely to be bullish here because, well, accumulation. We had our final liquidity run below that low and it did take it out. It's not an equal low. We did run that. That is a liquidity run. That was a huge sell to buy. That's where we had the repricing, the failure to generate the lower low within this counter trend. And that's where we made that higher high. So naturally pulling back into that level was valid and you could have taken that trade as well. But we can start to see the structure start to shift. So where is the range of the current market structure? Well, we have this is the current, well, this is not the current range, but this was the range. We had the pullback, higher high, higher low, higher high now because we cleared this high. So now this is the range. So now we could trade within this range to do something like this, or we can continue with the lower time frame trend and do something like that. So this would be the lower time frame opportunity. This would be the higher time frame, quote unquote, opportunity. So when I say opportunities, this is why I have so many different levels of interest, because I don't care which levels are met and which ones are not. If I'm following the overall structure of the market, if I'm following supply and demand, if I'm following liquidity and time and price, then I'm fine. If I'm following all of my confluences and rules, I don't care how many times I lose because I know my strategy is overall profitable, because we have to attack the market the same way every single time without fail. Without fail, meaning discipline needs to be on point. And if it's not, that's probably why you're losing. right? So there have been many people who have reached out to me over the past month saying, I'm in drawdown. I haven't been doing so well. The beginning of the year was great. Why is it not? Guys, you're not meant to win every single day, every single week, every single month. If you think that's how it works, I'm sorry, you're just wrong. It's not how the market works. You will go on losing streaks. It doesn't mean you're doing anything wrong per se. It just means you need to step back, take a break, and continue to follow your trading plan, knowing that over the long term, it will yield profitability for you if you have been experienced in the market. And if you have not been, this is why I recommend mentorship. It just will fast track you a little quicker. Anyways, I'm gonna go over the VFI. So I love looking at the VFI when it comes down to price volume divergence for structural shifts. So we can see here that we had massive divergence. Price is falling, volume is rising, institutions are offloading their positions, which is why price is falling still. Buying volume is starting to come into the market. Now they can take over and now price can start to come in and we go bullish and shift structure. So that's probably what's going on. And I just want to follow the current structure of the market and then look to continue to trade north. Let me just get rid of all this stuff. Sorry, guys. Anyways, scaling in. We can see that is the last down move. We did not mitigate that level, which is why we could see an overall retracement, and that could be sell side liquidity to run before continuing. Or we follow the current structure of this right here and we continue off of this previous level of demand. Why? Low, high, failed, higher, high. That's the demand. So let's scale in a little bit further. I want to go to like the 5 minute and show you high, low, high. Why did we stop here? Well, this on the lower time frame was that last repricing. Really, this is the last selling volume, obviously, or really this is the repricing that failed to generate the lower low. But since price came down, this was all in hindsight. I saw that level, and that's exactly probably why we came into that. So it's starting to make sense, right? Not everything, I can't figure every single little move out in the market. You're not supposed to. I'm looking at this and I marked this up in hindsight to produce further setups in the future through building confluences. So now that I know, okay, I look back at that level, that's an interested level. We came into that to the T, we started to accumulate, we rebounded, we pulled back, we repriced, and we continued higher and made that higher high compared to that high. Now this becomes the range of the lower time frame. I'm looking to buy here with stops below that level. If we come lower, then that will definitely be another area of interest for continuations north, right? Because at the end of the day, we're not meant to win every trade. If price comes into this level and I take the trade and I win immediately, great. If not, I lose this trade. Maybe I win that one. Who cares? Risk to reward is what trumps pips. Do not matter at all. Pips do not matter. If you think pips matter, you need to go back and relearn how to trade because that is not the correct way of thinking. Sorry, I'm not sorry at the same time. Guys, sometimes it's okay to have constructive criticism. I was certainly dealt that when I first started trading. That's why I am so strict with my community, and that's why my community does so well, is because they learn the right stuff and they are held accountable for their mistakes while also getting reinforced through what they've learned in our course material, but also getting the guidance they need to succeed. So I'm not a drill sergeant. However, I will definitely hold you accountable and teach you the right material, because there is so much bullshit material out there that people are just trying to sell you because they don't know how to trade, and that's how they make their money. We as traders make money in the market, not through selling courses. Anyways, continuations, CHFJPY. We called this out, this level here. I know you're probably saying, oh, it's a huge stop loss. It's a huge stop loss. Okay, what's the risk to reward on this? This is a 1 to 4. Does that meet my rules? Yes. I don't need a 1 to 20. I don't need a 1 to 50. I don't need a 1 to 1 million like 90% of everyone tries to get. I trade very, very smoothly without care of lower time frame noise, right? Because if I lose this trade here, I have this trade, and the probability of coming below structure is very unlikely. If it does, then I have these two levels, and we can see that this was following structure on the higher time frame, so this would be an overall pullback. I could lose this trade here, this trade here, this trade here, and this trade here, and win this trade, and guess what? It would take care of all my losses. That's why it comes down to probability. Retail traders focus on when they're getting in, right? They want to get in all the time because they have to make money every single second of every day. Professional traders look at where they're getting in, right? You need to understand where to get in and not how many times I need to get in to satisfy my ego, right? It's all about psychology as well. So anyways, we had this beautiful wick entry. Liquidity was run into our first level. We had that expansionary move. We have equal highs, which is why it's just so obvious to continue to look for buys, because we're bound to take buy side liquidity at some point. And then what we did do is we pulled back. We had that huge sell to buy Thursday during Asian session into the imbalance, into that lower time frame demand, and we had the reaction. Now, I'm not saying that we're going to just react off that level and go long. We could sweep liquidity, sweep, and then go long again. If that's the case, we continue to look for buys because we understand the direction. Lower time frame. Let's go to the 5 minute. Maybe scale into the 4. Maybe the 3. Anyways, when we had that sell to buy, that was our repricing. This was the reaction off that supply, which failed to generate the lower low, which ended the counter trend. And we started with the uptrend here. So that would be that lower time frame level. Next week would be that sell side liquidity run. Sweep it, continue. That would be something I would be interested in seeing. If we come lower, then we're waiting for our secondary level. I may look to enter into here again because that would be a good sell point or sell side liquidity to be run, right? This occurred on Friday, September 1st. So we could sweep this month's low, which would be last Friday's low. Friday's low and high are likely swept in direction of trend. So sell side liquidity run for continuations is what we could see. So we'll just have to reevaluate if that occurs, and we'll look for more setups. But anyways, looking for overall buys.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
EURGBP, I really don't have much on this. We're overall bearish at the moment. That is definitely obvious, but we had this huge sell side liquidity run this low. We can see the sponsored candle sell to buy. This happened at 3 a.m. Eastern time. This is London session open, and this is where we broke the structure back up to the upside on the lower time frame. We did not on the higher time frame. We're still bearish here, so we have to just keep that in the back of our mind, right? So what we did do is we created buy side liquidity, sell side liquidity. So we took buy side, we took sell side, and now we took buy side again. So could we just continue like that? Sure. What we could also do is look at this as points of liquidity and say, okay, we took buy side, we run sell side now into our level, and then continue with that type 2 manipulation that we talk about within our VIP community. So that's definitely an area of interest for me around 8520 psychological level. EURJPY, very similar to all the other yen pairs, looking for overall upside. We haven't come into our higher time frame objective yet at 160. That has been lurking for quite some time. We are extremely bullish on the higher and lower time frames. 50 EMA is acting as that dynamic support. Scale into lower time frame here. You can see the lower time frame, well, 4 hour, we'll call it 4 hour structure. High, low, high, low, high, right? So this is the current range. We had that huge sell to buy like we've had on all the other yen pairs, as mentioned earlier in the video. Sweeping sell side liquidity here. And if I scale into the lower time frame in the 1 hour, what we'll see is that lower time frame demand. We had that reaction off supply. We made the lower low, lower high, failed, higher high. That's where we started the uptrend. Huge imbalance right there. Just straight buying volume. No sells were offered in that region. So that could be a level in which we come into 154.9, 153.5. I have my levels if we have the overall pullback, right? Because every single lower time frame trend ends in some sort of overall pullback, which creates, if you scale out, a structural point, right? Let me just mark this up. Sorry, guys. Like that. Boom, 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 boom. Like that. If you scale out even more, what will this create? Eventually, like this. So this would be a higher time frame expansion, overall pullback, potential overall expansion again. The market is fractal. It does the same thing on every single time frame. So just because we may break structure here, right, for the people who have tunnel vision, you're going to get stopped out. Why? Because you're going to think this is a break of structure to where we're supposed to pull back and go short, but in all reality, it's going to take your stop loss because you didn't understand higher time frame structure. All right, I don't mean to sound rude, guys, but this is the type of stuff that I'm receiving in terms of messages all the time. You guys are marking stuff up like this. Like, oh, we're supposed to short off. No, we got to zoom out. So I'm going to keep saying it because I keep receiving it. All right. So here, a lot of buy and sell side liquidity, just taking liquidity on either side of the market. There was really no setup at all. Right, we took buy side, we took sell side, we took buy side again, looking to probably take sell side in here. So I'm not really interested in anything that's going on in here for buys. I want to take that sell side liquidity into that level of demand. Let me just get rid of all this stuff. Into this level of demand that's unmitigated. And if we come lower than that, then we have our higher time frame regions. So we have very high probability to come up into our level because of liquidity, because of lower time frame structure, sell side, because of the overall objective hasn't been met yet, and because we have higher time frame levels as well for imbalance, for continuation. So either way, should I win at least one of these trades? Probably, right? Because the probability of price going along, like it's been doing for, let's just see, right? Just to make my point here. Been going long since 2012, right? What's the probability it's going to go long versus short? Higher than it's going to go. The probability of it going long is higher than it going short. Let's just say that. All right, because we've been in an uptrend forever, essentially. Okay, EURCAD. EURCAD. Okay, sweet. So we have equal highs on the higher time frame. We can see that high and that high here. If you want to look at the exact price point, high is 1.51129. This is right in here. I don't know why it's not working for me. 1.51145. I think that's higher, right? Did I do the math correct? 1.1129. Yeah, so this did not come higher than this high. So those are equal highs. That is a lot of buy side liquidity. So whether we go long or short in the short term is whatever. Overall, we are extremely bullish. Now, of course, I'm looking to continue to trade to try to see if this is an overall expansion into that buy side liquidity. So now we look at the current structure of the higher time frame and see, okay, high, low, high, low, high, low. This is an unmitigated level of demand. These are equal lows. This would be great sell side liquidity to run before continuations, right, into that level. That's why I have that level there. I actually have two levels because I have a lower time frame level of demand right below it around 1.4451. But anyways, if you look at the lower time frame, what we'll see is this 1, 2, 3, 4 touches of this trend line. Retail was stopped out because they were selling with the trend line. Huge buy to sell. And if we look at it from a structural standpoint, high, low, high, lower low. So now we could be in for an overall retracement into the objective to where then we'll buy. So do we have an opportunity to counter trend short it? Well, in this case, we swept a lot of buy side liquidity. We made a lower low. So could we classify this as the new range, high to low, if we do get a pullback, let's say? Yes. And what we're doing is generating liquidity. 1, 2, 3 touches. So sweep liquidity, continue with the counter trend, boom, short, 1.4740 psychological level. And that's exactly where on the 4-hour time frame, we started that initial influx of liquidity right here. This is where it was started. So it's not just the last buying candle. It's not right here. That's not the sponsor candle, right? It's not always a candle. It's usually a region of price. Where was the liquidity influxed? It was influxed right here. This is where it started. So 4740, I would like to see that buy to sell, short off counter trend, buy it from the overall level to go long. All right, so that is EURCAD, GBP Swiss franc. So we're kind of just consolidating. I really don't have a setup at the moment, but what we're noticing on the lower time frame, we're following overall supply. There's supply here, supply here, supply here, and there's supply here. We're also following demand, 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 demand. I'm not meant to zoom into all this stuff. I'm just trying to show you what is that, like what's broadly what's going on. So if we scale into this, we can see that if we were to go short, I think that we still need to come up into supply, right? Have the overall pullback into supply and then make a lower low. If we're looking to go long, if price is going to go long, well, we're looking for buys anyways, because we can see that sell side liquidity run with this wick, sell to buy, and we made a high, a low, a higher high. So now I think this is probably the start of the overall pullback. So that's why we're looking to go long. We created equal lows and we had a great trade from this level. We're still in it. Equal lows, liquidity prior to the zone. And let me just show you where the zone is. Just go to the 15-minute. That's why when we had the liquidity run to the left here, we had that sell to buy and then this repricing. repricing here, consolidation, and then we started the uptrend. So that would be that demand level. So that's exactly why we created liquidity prior to the zone, and then we came into it, creating the huge sell to buy. So I would like to see continuations. We're still counter trend here. Even though we came into this level, we're still counter trend bearish. We haven't had any follow through and made a higher high compared to this high yet. We haven't done that yet. So that's just why there's no really a good current setup, unless maybe we see some sort of, sell to buy, higher high that clearly shifts structure, right? Because I would be looking at it from this perspective, right? High, low, high, low. Yeah, higher high. However, we're still making lower lows, lower highs, potentially like that, right? Now, if I look at it from this way, high, low, I would need to see a higher high. If that happens, then that would be great for continuation. So I will be looking for, I'm not going to be placing any new trades. I'm at break even already. I already took some partial, so I'm good. But if we end up going like this for some reason, then that would be a great opportunity to look for buys. There's no setup at the moment. That could happen. That could not happen. Who knows? But we have to be prepared if it does. We have to be looking at what's going on. All right. That's GBP Swiss franc, GBP CAD. I really do like GCAD. Even though we have a lot of buy-side liquidity, even though we are overall bullish, I do like counter trend opportunities because we have a lot of sell-side to take in an area of demand that has been unmitigated. So higher time frame, obviously we are clearly in an uptrend. We have this high here that has not been taken out, and very similar, this high here has failed to be taken out as well. So what I would like to see is the trend continue this way, right? So we have a high, we have a low. We have a high, we have a low. Sell side was run, creating demand. Just scale into that. That's that selling volume, higher high, more liquidity, run into demand, higher high. Broke the counter trend, pulled back, lower time from imbalance and demand, sell side, continuing, higher high. Where's the last repricing? This is the counter trend. That's the repricing. That's the last selling volume. And if you scale in, there's another one right in there that's unmitigated. You just scale to a lower time frame. Sorry, I know I talk fast, guys. I just have to get through all this. Anyways, we failed to come into it immediately, right? And I like this type of opportunity because now we have a lot of buy side, we have sell side. What we could do is sweep it and go long. I love this type of setup. So definitely looking for buys here. These two levels, first one is 1.6850, sweeping sell side liquidity. Now, lower time frame, we could be looking to attack these lows now and come into here, and the counter trend, we have a high, we have a low, we have a high, we have a low, we have a high, we have a low. We failed to generate the higher high, made the lower low. So now we could be seeing this overall retracement into our level to sweep liquidity to then go long. You guys see how I'm following the lower time frame structure and the higher time frame structure and having higher time frame and lower time frame objective points? It's really not that difficult. You just have to train your eyes to see it. And we teach you how to do that in our courses. Very, very simple. So anyways, continuing lower low, lower high, lower low. If you follow the lower time frame structure now, what we'll notice, supply was met, supply in here was met. This was the last buying volume right here, and we have huge imbalance. We actually have created lower time frame equal high. So I'd like to see this run, buy side liquidity run into that supply for one more sell off to the downside for a nice 1 to 4.74 risk to reward. Okay. Continuing, GBP USD, very, very similar. We're looking for EURGBP longs. We're looking for GBP GBP US or CAD shorts, GBPUSD shorts, and we'll also be looking for GBPNZD shorts. So pound weakness at the moment is the theme. Overall on GU, yes, we are higher time frame bullish. That is definitely true. And if we are to go long, we really need to do that probably within the structure here, because if we see high, low, higher high, this is the repricing before we started the uptrend again. So maybe we just come a little bit deeper into the level. I'm going to be taking partials throughout. Maybe 1.23 could be that potential sell side liquidity run if we actually do take it. But we'll have to just see. We really are still bearish here at the moment. 1 hour time frame, we're going to look at it from a higher and lower time frame perspective. Higher time frame, we have high, we have a low, we have a high, we have a lower low. So where's the range between the previous high and the previous low? So if we get an overall retracement, we're still in the range. What could we be looking to sell from? Well, we have to look at the counter trend. This is the counter trend. high, low, failed, lower, low. So this becomes that demand to supply flip, and that's why that would be the region in which to sell it from, 1.2660 psychological level, right? We also have the lower time frame. So we could have an overall pullback, or we could just continue to follow the lower time frame structure here. And that's the previous supply zone. So we could sweep equal highs, which are in here, and then take it and then sell off again. So that's definitely something we could look out for. I am looking for overall short.
Folks, if you're looking for an automated trade journal or trade copier, then check out my sponsor, Swift Journal. They connect to your MetaTrader 4 or 5 broker or prop firm and give you amazing insights into your trading. To get 20% off, click the link in the description and use coupon code TRADINGNUT.
Dollar is still extremely bullish. As we can see here on the daily time frame, we're continuing to push higher. We have a lot of imbalance. This is the previous supply zone. So I do think that we'll probably run more intra high liquidity, fill some imbalance, come up into that supply. So it's still, I think we're going to be bullish. Overall, I want to see dollar weakness. And you know, this is why it's so important. This is why our, I don't know what you call it, slogan, motto, whatever the heck it is. If you go to our website, it says trade what you see and not what you want to see. Even though I want to see dollar weakness, I'm still looking for shorts on XXXUSD. I'm still looking to buy dollar right now. I do believe that dollar will see weakness at some point, just based upon what is going on macroeconomically and what is going on with the dollar in terms of other countries and, you know, the whole, what's it called? I forget the name of it. Starts with a B. It's like 5 countries. Anyways, dollar is pretty much worthless. That's what I'm trying to say. I think we're probably pumping to dump at some point. Anyways, GBPNZD, looking for overall longs. Not sure where that'll be. Is that going to be here? Are we going to have an overall retracement? Who knows? Currently, right now, I'm following the theme of pound weakness with the current counter trend. So the current trend on the lower time frame is bearish, and we haven't even reached a region down in here, which is the previous demand zone, to even potentially think about going long. I'm not going to be just placing buy limits here. However, could price go long from there? Yeah. And if it does, meaning if it's going to go long, it should go long from this level, right? So that means that this is a good overall objective for counter trend shorts, right? Obviously, because we have a setup for it. So what we can see here is we have a high, we have a low, we have a high, we have a low. I know we swept liquidity, but low, high, low, and then we swept liquidity and made the lower low compared to that low. So this is the current range of the market. And where did we come back up into? We swept liquidity and we came up into that repricing, right? This was, if you look at this structure, the last buying volume before now we started to fall. So we mitigated that region. I didn't take a short. Why wouldn't I take a short? Because we could have easily went long. This could have easily have been the pullback and we have just went long. Right? Because we're bullish overall. But the fact that we came into that level, stopped, and then made a lower low again, now I can see this as a failure to generate the higher high, lower low. We can continue to look for shorts, at least into our objective. This is how we generate setups. This is why we don't force setups. This is why so many people in this world are probably losing during the August and December times. It's because they're impatient and they're not seeing the setups that they want, so they force trades and they lose and blow their account. I have not traded a lot lately. And it's a good thing because there hasn't been any setups. But this is just the mindset we have to get into. We have to get into the mindset of taking a trade when our rules are met and sitting on our hands when they're not met. It's as simple as that. But it's very difficult for everyone because they're so caught up in FOMO and trying to make as much money as possible, trying to make $1 million overnight and become Andrew Tate. You're not Andrew Tate. You're not that guy. Okay. So we're going to continue to look for shorts. From where? Well, this is a previous level of supply. So we continue short here. That would be that last buying volume. We have a high, we have a low, we have a high, we have a low, we have a high, we have a low. Demand failed to make a higher high within this pullback, lower low. So that would be that region for flips. If we come a little bit deeper, that's fine. I mean, as long as we don't come above that high, I'm liking 2.1341, which is this last buying volume before the sell-off. So 2 regions of price. That's why I have this marked up. And just because, guys, I have these risk to reward tools set up does not mean I'm actually taking these trades. All right, this does not mean this is something that you should just take and these are signals. This is just to show you where you should be looking to place entry, stop, and how you should, mix up your trades, not mix up your trades, but split up your trades if you have different regions, right? And then looking where we can take profit based upon higher and lower time frame supply and demand zones and structure. All right, so that's why I have that. So it's an interesting level to look for shorts this upcoming week. A couple more. NZDUSD. I really don't prefer NZDUSD, honestly. This is really just kind of following the structure. This is not my typical setup, but I can share it anyways. We do have sell side liquidity. We have equal lows that will likely be run out. So that's why I'm looking for continued shorts. Even though we still are currently counter trend bullish, we came into this mini level of supply. So could we come back up into that last buying volume next week and sell off? Could that be the end of the pullback and then we make a lower low into sell side? Potentially. And if we come higher, then I like this region of price here on the higher time frame. This is where we came into this demand. We failed and then we made the lower low. So it's not my typical setup because it doesn't provide me with the best risk to reward. And it's, in here, we don't look to sell at supply in an uptrend, right? If this is the current structure, we have to wait for price to stop, fail to generate the higher high, make sure this counter trend is over, make a lower low, and then we can take it off of another supply. That would be my typical setup. And then in here, the reason why this is really not the best zone is, it's a good zone, but this is the structure in the range of the market. If you're going to be placing sell limits, you got to put stop above here, which the risk to reward for that just would not be there. So I'm giving you areas of interest to look out for. So this is kind of where I'm going to be looking to, looking for where price, comes into and reacts to see if we can see any reactions, maybe start to the week, midweek. So again, I'm not telling you guys to short from those levels, just to keep an eye on those levels. We're looking for overall shorts. That's my directional bias because dollar is still strong. And we have sell side liquidity below. And obviously VIP and the Funded Traders Club will get up to date with everything throughout the week. All right, USD CAD. Just kind of following structure here. I don't really have the best setup in the world, but we're bullish, high, low, high, low. This is the high that made this low. We swept a lot of sell side liquidity, sell to buy, higher high. So where's the current range? This is the range. So if we get an overall retracement, where are we likely to come into? Well, let's just scale in here. There really isn't a sponsored candle. There really is no area of demand. Yeah, you can classify that as less selling volume, but that's just, not really the best. It's kind of hard to explain. It's kind of intuitive. I'm looking at when this stuff happens, I look at imbalance over the demand in this case. 50% lines up with about 1.3550. So that's a good area for potential longs. So I will be looking for that come next week potentially. USD Swiss franc, very similar. We have buy side liquidity, 1, 2, 3 touches. I just think price is going to continue to go long. 4-hour time frame. I don't know why it keeps doing this. I don't know why it extends my regions. Anyways, you guys can see what I mean. I'm gonna go to the daily. Current structure is bearish. We're bearish overall. Low, high, low, high, low. Where is the previous supply zone? Well, if you just look at it from this perspective, that's our failure to make the higher high, lower low. We got to be entering into that position, meaning entering into this area, not position. And when I mean entering by, I'm not saying sell it. I'm just saying we got to be, look, when price becomes bullish as it is here, that would be the area in which it would likely come into. So I'm not saying it's going to short off from that region. I'm just saying that's the overall objective until potential shorts could occur. The current trend is bullish. That's the area in which we're likely to come into. So overall, this is the supply, but right in here, this is where we had the imbalance, and that's where the last buying volume is, just somewhere in here within this distribution that we had in the lower time frame. So I'm looking at it from a 8,950, that's the cycle level. If we zoom in here, and we go to the 1 hour now, if we just look at what's going on right here, we're currently bullish. Could we look for potential buys? If price goes short right now, would I look for buys? Absolutely. Why? Because we're currently bullish. Right, we're making higher highs and higher lows. We haven't come into objective yet. And right in here, we created buy side and sell side liquidity, equal highs and equal lows. What do? We took buy side, enticing buyers, came back down, took their stops, enticing sellers below the breakout of the lows here, pushing up, taking their stops. So everyone has been swept out of the market, huge buy to sell to buy. That's that type 2 manipulation we talk about. So where's the counter trend? Low, high, failed, higher high. So this is our repricing. And I guess you can say in here, this is also area of consolidation before the imbalance move here. So really, I guess you can say this is where the start of it is. This is where the end of it is. Could we come into this level? Yeah, potentially. If we have a deeper retracement, at the end of the day, this is the low that generated this high. We could come 99.9% of the way here and go long and still maintain bullish structure, right? That's just how it works. So we have to be very kind of precise here. So what I'll also do, just for, poops and giggles, right? I'm not gonna try not to swear too much on these episodes, but I get passionate, right? I get excited. That's just what I do. So we could have potential a couple entries, right? If price comes short into that level, great. Look to long it, maybe put stop at the secondary entry. Go long, put stop at the third entry. Go long, put the stop at the overall low, because what are the chances? If price hasn't come up into this region yet, right? We're bullish, counter trend. We've created a buy to sell to buy. We have these supplies or demand zones. What's the probability that we actually go like this? Not nearly as highly probable as if we go like this or like that or like this. So that is why probabilities are your friend, right? Trying to time the market and being 100%, you are never going to make a penny ever in the long run, if that's the mindset you have. Always look at it from a probability standpoint, knowing that if it goes like this, so what? You split up your risk. Maybe third, and third. The most you can lose is 1%. 1% doesn't harm you. You're still in for the next day. All right, trade for the next day. Use good risk management. Do the simple things. Do the easy things. It's not hard to use good risk management. I really don't know why people still over leverage. It doesn't make any sense. So the reason why I like this level here as well is because, well, let's just scale in even further, 5 minute maybe. And this is where you just have to keep scaling in. This is why there's no specific time frame I look at. A lot of people ask me, what time frame do you look at? I look at every time frame, every single one. Why? Because the market's fractal. You need to keep looking until you find something. If you don't find something, then there's nothing there. And I have found something here. 5 minute, this looks the prettiest. Low, high, failed, higher, high. That would be that imbalance move, that demand zone. So that's why I have those 3 zones. Right? So you can see how I'm getting my areas of interest while following structure, while following liquidity runs, while following higher time frame objectives. Now the question becomes, what if we come up into that level and then we start to fall? Would I hedge at these positions? Well, currently, if we're still bullish, you can still look to trade long even if you come into objective, right? But maybe lower your risk a little bit. I still would probably take that trade, even if we did come into that level and look to short off. But what I would also do, if that's the case, if we actually do come up into that level and we start to sell off, I look for potential shorting opportunities to hedge my potential longs. All right, but again, you only hedge if the lower and higher time frames are not in conjunction with one another. And also if you have setups for both buys and sells. If you want to hedge for the sake of hedging, and you have buy setups but no sell setups, why are you selling? Treat each trade as its own. All right, so those 3 levels are definitely what I'm looking for. I'm just gonna make this pretty. I'm OCD like that, so I just have to make the exact price point. 84, 82, sweet. Okay, so I mean, sorry guys, that's just what I do. I'm a perfectionist, and that's not always the best in trading. However, I've been able to manage that, and that's why I'm able to see the levels in which I want to see, in which that are presenting itself. Sorry, last one, NZD Swiss franc. I like NZD Swiss franc. It's one of my favorite pairs. I like NCHF, I like ACHF, I like ACAD, I love NCAD. Not all the time am I going to be getting the setups that I want on the pairs that I like. That's okay, right? It happens sometimes. I really haven't traded ACHF in months. I love ACHF, but I haven't traded it in months. Why? Because there hasn't been a setup on it. Simple as that. It's really as simple as that, right? You have to get to a point where the money doesn't matter to you, right? What matters to you is following the plan. What matters to you is percentages. Right? If you are a beginner trader or a trader of less than 2 years and you're trying to use Forex as a way of living and making money and paying for bills, you're not doing the right thing, in my opinion. Right? Because you're putting too much pressure on yourself to make money, whereas the pressure should be put on learning the skill set and failing and learning from your mistakes and moving on. Right? So that's how we become better. If we're putting too much pressure on making money, that's going to lead to so many other psychological issues in your trading, and it's going to ultimately lead to your failure, right? So just some words of wisdom. NZDCHF here. We have higher time frame 5300. We have that level. We haven't come up into that level yet. We have that wick here. We still have room to go potentially because, well, it's probably just going to be sort of retest of that previous low there. Whenever I see lower time frame shifts below a previous low, we have lower time frame. That's likely where we're to come into. I'm not going to be looking to sell it there. That's not what I'm saying. I'm just saying that counter trend buys, we should be taking profit there. That's why we had this level right in here. It's exactly why we had that low. We had accumulation, we had divergence as well. We made the higher high in comparison to that high. We generated liquidity. Again, very important to see. Generated liquidity. Also this sort of head and shoulders fake out to go long. So we made that higher high and then the higher low into the repricing. Low, high, low, high, low, high, low, high, failed, higher high. That's the demand. Boom. Now we make a move to the upside. Partials have been taken, stops to break even. I did get hit out break even there this past week. That's okay. Or actually, I think it was last week. Oh no, it was this week, the 5th. Okay, cool. That's why I really don't look at my MT4 and MT5, guys. And this is something that you should probably do as well. Don't look at your MT4, MT5. Let the charts tell you what's going on. If you're so focused, because what it does to you psychologically, if you're looking at your MT4 and MT5, is you're looking at the money. You're looking at the numbers, right? You're looking at like, oh, I'm up $50. Oh, I'm up $100. Oh, I'm up $200. Oh, I'm down $40. When you look at it from that perspective, you don't make the right decisions. You take profit too quickly because you're seeing that drop, from $10 to $20 to $30 to $100, and that psychology affects your decision making. But if you're looking at it from a chart perspective, you don't see numbers on the chart except for price, right? You just see the movements and the areas and the highs and the lows. That's what you need to be looking at when making decisions, and not based upon how much you're in drawdown or how much you're in profit. Right? That's just what I would recommend. So anyways, higher high, higher low, higher high, higher low. We swept sell side liquidity with that sell to buy. Now we're starting to trend up. I do believe we'll hit that 5 level. I do believe we'll take that high out. So continuing to follow structure here. We have the high, we have the low. So yeah, high, low, high, low. High, low, I mean, right in here, that's a good area of demand. That could be a nice sell side liquidity run for continuations. However, this is the current range. So what I'd likely do is probably have to put, maybe not stop here because we could sweep that low, might sweep that low. Stops could go here, or there. I mean, either one would work. It just depends on what works. To be the most conservative, entry there, stop there. To be more aggressive, entry here, stop there. Overall, the direction is bullish. And if that's not a type of setup you like to take, it's not the prettiest looking setup. What we could look for, I don't know, maybe liquidity run, some sort of, reaction from the level, counter trend break, maybe some sort of area of sponsorship or demand that we could pull back into and continue, something like that. So we'll just have to see what happens throughout the week. But we have a lot of good areas of interest that are forming right now. So very interested in to see what this upcoming week brings to us. I had a lot of great trades over the past month, even though we didn't trade nearly as much as we used to. I loved AJ this past month. In August, it was great to me. But at the end of the day, guys, you have to just be aware of your psychology. You have to, understand that you're not going to win every day, and you have to be able to trade your plan and meet your rules and be disciplined instead of trying to trade X amount of trades a day or X amount of trades a week. That's just not how you be profitable, right? The market doesn't care about how many trades you take a day or a week. What you should care about more is where am I getting in, not when I'm getting in. All right, guys. So I appreciate your patience with this video. I know it was quite long. Hope you guys learned something. Hope you guys took some value from this video. If you have any questions, feel free to let me know. I'll be happy to help in any way that I can, even if you're not part of my community. But if you want to be, head over to my website, aerialfxtrading.com, book a free call, just see what it's all about. I'm really not intimidating, I promise. Just chill, wanting to see how I can best help you. And if I can, great. We'd love to get you a part of our community. And if not, no worries. Don't worry about it. We'll get you our free trading plan because it may not be the right fit for you. And that's what we want to find out, right? Not going to sell you something that won't help you, right? So just want to see where that fits. Anyways, guys, have a great weekend. Have a great trading week ahead, and we'll talk to you later. Cheers.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.